Welcome everybody to episode 5 of our crash course here at V2 Trading. Today we will be going over combining everything together and truly tying everything together with what we have learned so far. So today we will be learning the reason to combine retracement with zones, how exactly to combine these, and we'll take you through some chart examples and walkthroughs so you have a better understanding so you can take some time to practice before the next episode tomorrow once again. So let's dive straight into this. The reasoning is that the zones, as we mentioned before, provide liquidity analysis. For value gaps and V2 levels, provide value and sentiment analysis. So zones provide us and tell us where liquidity and the money really is, while fair value gaps and V2 levels show an area where it might be good to take an entry in and to understand overall sentiment in the market. We as a trader provide price action analysis, so we understand the current price action. We also do fundamental analysis, which is essentially understanding everything to do with the news, the market, and things like that, things outside of the charts. For example, if Trump gave out a new tariff that is negative, you might expect price to go lower, things in that sort. We as a trader need to tie everything together to make the best decisions and make the best predictions in the market. We are essentially an architect as a trader. The more tools in our toolbox, the easier it is to trade or to build a big house. Think of it as an architect, right? If we as a trader have more tools, we can become a better trader as well. Although we don't want to use too many tools, we want to use a balance of tools that allow us to build the best thing we can in the shortest amount of time possible, because time is essential and value is also essential. We also want to be patient. Just like an architect, you have to wait for the right opportunity and the right time to build a home when the market is nice. Just like that, as a trader, we need to wait for opportunities to present themselves and truly show up in the market. We need to understand all of this in unison to understand what price may move next. We either use as entries, stop loss, or TPs, which is take profits. We need to combine all of this together to succeed as a trader. So let's take you through some examples and some walkthroughs as well. Okay, so here's one quick example of how we tied everything together, and this is like literally live at the time of recording as well. So on the 15-minute chart, we see a 15-minute zone come up and break this fair value gap to the upside. We have an inverse fair value gap play coming around this area. We broke the fair value gap with volume. Now after we did that, we saw a retracement and we pulled back into the zone. Additionally, we did break the 0.75 level, but without momentum. We actually used it as an area for liquidity and pushed back up. This here is enough to understand the price will continue to go higher, and you can enter anywhere around here and take profit after these highs or even those highs. You see how we tied everything together? We used zones, we used our V2 levels, we used inverse fair value gap, and we also understood overall market sentiment on a higher time frame as well. In recent time, we have been shifting to an overall uptrend, when previously we have been going on downtrend. But now we're going back to the overall weekly trend rather than this previous and current small downtrend which we've been happening. We may expect to see a rise soon, but we'll have to see and see how market opens. It all depends on this upcoming week after this time of recording. Let's take you through some other examples as well. Alright, here is another great example that demonstrates the power of combining everything together as well. What do we see? On a higher time frame, we likely see liquidity up near these highs, and if I haven't told you how to mark liquidity prior, I apologize, but liquidity is one of the most simple topics regarding marking these areas as well. What you do with liquidity is essentially go to these higher time frames in the hourly range and you mark the highs and the lows of different ranges. When you see a buy candle followed by a sell candle or a sell candle followed by a buy candle, it is going to be at the lows or the highs of that overall range. You have to understand this as a trader and make trades regarding that, using that as analysis as well. So let's take a look at what we saw right around here. So we saw many things, but it's quite easy. So in this example, what do we see? We see a zone get created over here, and then we see expansion via this area as well, and we see this big area of expansion, and we see a retracement following that. This example is really good because we literally confirm and validate each three of these confluences. First, we marked our V2 levels, and from these V2 levels, we respected each and every single one, and we didn't break through the 0 point level with strength. Additionally, we respected this fair value gap and filled it and started seeing rejection following it. Additionally, we tapped in this zone and used that as analysis as well. All three of these confluences in unison can bring you a damn good of a trade and damn good of understanding where the market will go next. As expected, the market went to around these levels, and these levels are typically going to be, this is going to be an overall liquidity zone as well. This is not going to be a supply and demand zone, but it's going to be a liquidity zone, just looking at the nature of that wick, and this will be demonstrated in how Bookmap looks as well. Let me find you one more example before we conclude the episode. Okay, so here is another example. So this one does not use a zone, but we do use a fair value gap and the V2 levels. Additionally, we do not use liquidity in this analysis as well. This is a very short-term analysis, but typically you want to be using liquidity, zones, fair value gaps, and V2 levels in unison. Typically, I would suggest using at least 2 confluences to determine if a trade is valid or not, but if you can only find one with very good price action, it could still succeed as well. It all depends on what you believe might work and how much confidence you have in that in unison price action as well. So assuming price action is valid at these levels, we see that price retraces into these V2 levels, specifically the top 2 V2 levels, and we come into this fair value gap area. What do we do next? The longs validate in the continuation of this trend, and you can take profit in this liquidity zone over there as well. You can find many examples in so much data here in TradingView, and I want to highly emphasize you guys to practice. The more you practice, the more you'll understand different things and find out what your strategy can actually come up to be. My strategy will always be different than your strategy because what I do will not work for everyone. And that is not because of simple analytics. That is because of how everyone's brain is programmed differently. You need to find the things that work for you and use different tools. But these are some of the tools that I use and that many other traders use as well, which you can take and add in your toolbox. That essentially concludes this episode. Today, we not only understood the significance of combining everything together, but we understood that trading is like being an architect. The more tools we have in our toolbox, the easier it is for us to build something great and to become a better trader overall. We also understood this through 3 different examples which I've shown, whether that be fair value gaps, a combination of 3, or a combination of 2. I highly encourage you to take your hard work time to paper trade and practice using all that we've learned in these 5 episodes together, because I believe that if you understand what we have learned in these 5 episodes, you can succeed with just these 5 episodes as well. But in the next 5 episodes, we'll be taking this into a bit more complexity and enter into the realm of order flow and much more, so you understand the analytics of market sentiment in live action. So thank you so much for listening and partaking in episode 5 of our crash course. If you have any questions, please leave a comment down below or join our Discord where I can help you out. I'll try responding as soon as possible, and I'll see you guys tomorrow. Thank you so much. Have a great day.